Hi, I'm Wallace. I'm the founder and CEO of Above Board Financial. Welcome back to the story of Stephanie. In this video, we're going to talk about why Stephanie needs an individual disability insurance policy and why it would be a huge mistake for her to rely only on her workplace coverage. And this is one of the most common misconceptions, especially for high earning professionals who work at an employer who's known for offering a good benefits package. They often assume, usually incorrectly, that they're already well covered when that's hardly ever the case. It is a sliver of the time. And if you forward your workplace benefits package to hello@aboveboardfinancial.com, we can verify for you what you actually have, or just drop us a note telling us your employer. We might have already reviewed the benefits package, but we can help you figure out if that's really the case, because usually people are left with a big gap in their coverage if they only have workplace. As a reminder, this is Stephanie. She is a third-year consultant at a global consulting firm, and she's making $360,000 of income per year. Her workplace plan follows a very typical format for a workplace plan that is offered by an employer with very generous benefits. I want to be clear that this is not the average you can expect from any workplace plan. It's specific to very generous plans that you see more often in professional services firms with very highly compensated professionals. So the workplace plan covers 60% of income, it's paid for by the employer, and it maxes out at $25,000 a month. So that maximum is not an issue for Stephanie today, but it will become one when she makes over $500,000 a year in the future. So let's check out the difference between what happens when Stephanie's healthy enough to work and what happens when she's on disability leave. And I'm going to get a cool laser pointer here to make this even more clear. So on the left side, you see healthy enough to work. She's making $30,000 a month before taxes from her work on average. Now, we're going to assume her tax rate is 40% because she's a high earner living in New York City. So between federal, state, and local, that's a reasonable ballpark number to use. That means her take-home pay is $18,000 a month after taxes. Now, over here on the right side, what happens when she's on disability leave? Her disability benefit is going to be $18,000 a month, but do not assume that means she's fully covered, because what's happening here is that the 60% that covers the 30% is producing that $18,000 disability payment, but then because the plan is employer paid, which means her employer is keeping the tax deduction for itself, she will owe income tax on that benefit. That means that her take-home disability benefit is only $10,800. So that's a full $7,200 less than what she was taking home when she was healthy enough to go to work. And so that's a reason why it's really important for Stephanie to have a supplemental disability insurance policy in place. So join us for the next video to talk about how Stephanie should decide what to get to address that risk and make sure that if life did have some sort of challenging health issue in store for her, that she would be okay from a financial perspective.